In this video, I'm going to share with you guys a simple but very powerful volume profile trading strategy. And this is one of the staples for my analysis video. Now, we need to be able to identify three key levels for this strategy. The first is going to be value area high, which is the blue line right here, which represents value area high. The second level is going to be the point of control. Now, the point of control is nothing more than the area on the chart, or should I say the specific price point that had the most amount of contracts traded on it. Then the third level is going to be all the way down here at value area low. Now, the volume profile indicators will automatically draw these levels out for you. On TradingView, it would look something like this. And on the NinjaTrader platform, it looks something, I have it set up like this, where the gray lines represent value area low, value area high, and the yellow line represents the point of control. Now, I want to illustrate to you how simple this strategy is going to be. It's going to be very, very simple. And again, this can help your overall analysis on the market in terms of, do you want to be bullish or bearish this market? And this is also going to give us logical target locations that we can look to target on this style of trading. Now, the first criteria that we want to see, and I'm going to start off, I'm just going to start right here on this day on this chart, but I'm going to draw a white line just across the levels, value area high and low, so we can see them very easily. Now, step number one, we need to see price either break above value area high, or we need to see it break down below value area low on the next day. Now, these white vertical lines basically represent each day. So this is one trading day, this is another trading day, so on and so forth. Now, in this example, we see that roughly right up in here, we start breaking above value area high. Now, notice we finally get a close down below it right here, where the market starts coming back down below that price point. Now, from that point, we can essentially then look to go short, targeting the point of control with a final target down here towards value area low. And again, it's going to be the very simple approach. Now, once we break value area low, as long as the market stays below it, we continue to look for sell side trades. However, in the event that we would come back above it, then we could just play the rotation back on the way up. Let's walk through a couple demonstrations. This is a very simple but powerful, effective method. Now, if you're saying, Mike, I don't have the volume profile indicator, well, you know what? You're in luck. If you hit the subscribe button down below and you have the bell notifications turned on for all, each day after the market is closed, I drop an analysis video sharing with you these very key levels that I'm talking about today. So you can manually draw the horizontal lines out by yourself. I also give out the overnight volume profile levels in the morning analysis video at 9:15 a.m. and all of that is free on YouTube. So make sure you are subscribed. So on this day, we never came back up above value area high. So as we go to the next day, I'm just simply going to grab these two lines straight down. Now, I don't like to look at the first candle up. Now, if we did, we can say, okay, we went above value area high right here. Then we came down below it. Well, guess what? Target number one would be the point of control. Then you would move your stop loss to break even. Secondary target is where? Right down here towards value area low. And look, once we broke it, we essentially stayed below that level for the whole entire day. Now, if we go ahead and we just keep fast forwarding through more and more days, that way you guys can see we're not cherry picking these results. Now, on this day right here, we can see we have a few price candles sitting right below this white line. I know it's a little bit hard to see because they're being covered up with the volume profile indicator. All right, now as we look right over here on this day, we can see we have two candles right here that are essentially below value area low. Now, this candle is basically touching value area low or very close to it. So as we break above value area low, we can then look to do what? Target this point of control right here, then have a final target all the way up here towards value area high. Well, in this case, we do get the test of point of control, but once the point of control is tested, we must move the stop loss to break even. So your secondary target would have been stopped out for break even. And that's just the way the cookie crumbles. Now, my stop loss would be right below the candle right before we broke into this. And I'll explain that in a little bit greater detail later on, along with showing you guys how you can find the same settings that I use for the volume profile indicator. Now, in this example, what do? Well, we end up coming back down right here. We try to come up right through here, and guess what? We never make it to the point of control. Then the market comes back down below this candle. Okay, boom, we have a loss on our hands. Then what do we get? We get another push up through it right here. Now, in this case, because the low of this candle is so far away from value area low, the stop loss could go right below that candle. Then we could look to target where the point of control. Once that is hit, you move your stop loss to break even. Now, if you're front running value area high by a few points or a few ticks, maybe you get filled on this, or maybe you get stopped out for break even. And again, not every trade is going to be a winning trade. That's why I just wanted to scroll through this day by day and show you some examples. Now, we come over here on this day, the white lines are going to represent value area low. Now, notice when the market opens up, we can see we are trading below value area low. So as long as we are below that price point, we know we didn't want to be on the sell side of the market. But where the volume profile trade really comes into play is once we break right back up here above value area low. Now you can see if you look real closely at this candle right here basically wicked right above that level. So you could have entered right there. Stop loss would have been below that candle. Notice how low that candle is away from value area low. Target number one would be the point of control. Target number two would be where? Right up here at value area high. Then for icing on the cake, since we went above value area high and now we're below it, we can play that same rotation back down towards the point of control and back down towards value area low. And just for illustration purposes, if we measure from value area low to the point of control, that's roughly 4.25 points. If we measure all the way up to value area high, that is 16.25 points. And when we pull the calculator up, let's go ahead and add up those points. 4.25 plus 16.25. That's going to give us a total of 20 point range on the way up. Then we'll measure how much profit we could have got on the way down. Now with the S&P 500 futures market, now if you're trading the E-mini futures contract, we have 4 ticks and a point, and each point is actually worth $50. So we would times that by 50. That move, just playing the rotation on the way up, had the potential for $1,000 of profit. Now, if we go ahead and we measure this on the way back down, we have to target number one, we actually have roughly 12.5 points. And down here to target number two, it's going to be about 17.25 points. So on the way down, we actually have the potential to make a little bit more money on this trade. So we'll go 17.25 plus 12.5. gives us a total of 29.75 points. We times that by $50, and it could have been $1,487 on the way down, almost a $2,500 profit if you were trading 2 contracts and you played the move up and you played the move down. Remember though, not every trade is going to work. You might say, Mike, I think there's a better way I could enter this. And I would agree, all right? You don't necessarily have to just play the candle break. If you have some other trading strategy that gives you a pinpoint entry into the market, which I prefer to use AlgoBox myself. And if you want to get the best deal on AlgoBox, it'll be the link in the description box down below. But in this event, as we start rotating through value, guess what? It gives me a bias in the market. It gives me a clear-cut answer in terms of should I be a buyer or should I be a seller? And it is flexible. It's not like, hey, we can only be a buyer, because we know once we break above value area high, if we cannot hold that price point, then we start coming back lower. Guess what? We know we then need to be on this sell side of the market. And again, it's nothing more than a very simple if-then syntax. If the market does this, then I'm looking to go do XYZ. Now, the same very concept works on TradingView. And even if you guys don't have the volume profile indicators, like I said earlier, if you watch my analysis videos, you can just simply take the levels and then draw horizontal lines across these levels, and you can play it once it breaks. Now, here's one that was a little bit trickier. Notice we broke into value and then we came back down and we closed below the low of that candle. Okay, that would have been a full loss on the trade. But then look as we came back up once again, all right? In this example, because the low is so close to value area low, I would have had my stop loss below here if I was not using some type of other strategy to give me the pinpoint entry into the market. But in the case that we're only using volume profile, my stop loss would be down here. Now, in this event, we then get target number one, then we get all the way up to target number two. And if we go ahead and look at how much we would have lost on the downswing, we would have lost 18.75 points. However, to the upside, we could have had the potential to make 38 points. And keep in mind, we would have took a partial profit right over here at about 16.25 points. Now, if you would have been stopped out, it would have been stopped out on 2 contracts, but still, because of value area high to low difference was so great that even though we got stopped out on attempt number 1, it still would have been a profitable scenario. Now, just to put this in the calculator so we can actually see this losing example and then compare that to how much we could have won. Let's just remeasure this real quick and we can see it looks like about 20 points. We'll actually round up. We're going to call it a 21-point loss. So 21 times 2, because now, right, we have 2 contracts on, and we go ahead and times that by 50, we would have lost roughly $2,100. All right, that sounds like it sucks. Keep in mind, you can still trade this very same strategy, trading micros as well, which would be $5 per point. Now, when we look at when we actually get the gain on the way up, let's go ahead and measure that one more time. From value area low, right up here to the point of control is going to be about 16.25 points. The value area high, it's going to be 38 points. I'm going to round down. So we'll do 16 plus 38. We'll round down here a little bit. We get 54 points of movement. We times that by 50 and we would have made $2,700. Now, simple math would say $2,700 minus $2,100 would still be a $600 profit. And that was with having a losing trade. And I don't want your expectations to be set that there will never be a losing trade. You will have losing trades. But if you start to implement this type of analysis within your trading, not only will it give you an area to when you should be long or short the market, but it also gives you logical target areas that get hit on a very consistent basis. Now, if you want to see the volume profile settings that I have set up for TradingView, watch this video right here.